silver has officially reclaimed ground above $64, and the momentum is hard to ignore. While much of the market's focus has been on gold nearing the $4,400 mark, silver is staging a massive recovery of its own. This isn't just a minor fluctuation, it is a direct response to a massive shift in how investors view the U.S. economy. We are seeing a classic flight to safety, where silver is acting as a high-beta play on the weakening U.S. dollar and the growing likelihood of a pivot in monetary policy. As the market digests the latest data, the question is no longer if silver will rise, but how high it can go before the next economic catalyst. So, what changed? The catalyst was a surprise drop in U.S. non-farm payrolls. When U.S. jobs data comes in weaker than expected, it sends shockwaves through the financial markets because it suggests the economy might be cooling faster than the Federal Reserve anticipated. This has caused rate hike bets to fade rapidly. Traders are no longer obsessing over how high rates will go, but rather how soon the Fed will start cutting them. In fact, the CME FedWatch tool now shows a 64% chance that the Fed will leave rates unmoved on September 16, with interest rate futures heavily pricing in a hold. This cooling sentiment is the primary engine driving silver back above $64. This shift in interest rate expectations is creating a domino effect across all safe haven assets. Gold is currently nearing $4,400, driven by strong safe haven demand and significant buying from central banks, including China's. When central banks accumulate gold, it provides a massive floor for the entire precious metals sector, lifting silver alongside it. Furthermore, we cannot ignore the geopolitical layer. Tensions in the Hormuz region are adding a layer of risk that traders are pricing in, creating a double-sided tailwind for silver, one side from the weakening U.S. dollar and the other from rising global uncertainty. Looking ahead, all eyes are fixed on September 16, the date of the next Federal Reserve decision. Currently, market traders' bets on the Fed holding off on a rate hike in September have risen significantly, reaching as high as 86% in recent sessions. This indicates a massive shift in sentiment. If the Fed confirms this dovish stance, silver could see even more aggressive upward movement. However, we must remain cautious. While the trend is bullish, any unexpected strength in U.S. employment data could quickly dampen this rally. For now, the path of least resistance for silver appears to be upward, supported by the fading fear of continued aggressive rate hikes. To wrap up, the silver rally above $64 is a clear signal that the market has shifted its focus from inflation fears to growth concerns. The combination of a cooling U.S. jobs market, fading rate hike bets, and rising geopolitical tensions has created a perfect storm for precious metals. Keep a very close eye on the September 16 Fed meeting. It will be the defining moment that determines whether silver continues its ascent or enters a period of consolidation. Stay tuned as we monitor these developments closely.